Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 21st of August 2023 and here are the questions we will be answering today. Are fresh headwinds hurting the Indian economy? Is India's plan to buy 10,000 electric buses enough? What can move the needle on markets now? And what is parliamentary privilege? The latest macro markers are out. India's retail inflation rate has risen to a 15-month high at 7.4% in July, much beyond the RBI's comfort zone. Industrial growth has come down to a 3-month low of 3.7% in June. And the country's good exports have declined for a 6th month running in July. So in today's first segment, Devarya Sanyal probes if the Indian economy is facing fresh signs of trouble. Let's listen in.
When life gives you tomatoes at 300 rupees a kg, what do? You don't make soup, that's for sure. India's food inflation for July has touched new highs at 11.51% compared to the much lower 4.55% in June and 6.69% last July. Fueled by the rising food prices, Consumer Price Index or CPI-based inflation rose sharply to 7.44% in July, considerably higher than 4.87% in June. This is the highest retail inflation since April 2022, when it was recorded at 7.79%. Meanwhile, as prices soared, growth in the Index of Industrial Production or IIP cooled to a 3-month low of 3.7% in June, from 5.2% in May, on the back of a high base effect and slowdown in manufacturing output, according to data released by the National Statistical Office. The IIP was 12.6% in June 2022. While infrastructure goods, electricity, and mining and consumer non-durables showed robust acceleration, growth in manufacturing and consumer durables deaccelerated. 14 of the 23 manufacturing sectors in the index, such as food products, beverages, tobacco, textiles, apparel, wood, paper products, and chemicals, registered a contraction in output growth during June. Add to this, the trade data released by the Commerce Ministry revealed that merchandise exports contracted for a 6th consecutive month in July by 15.9% year-on-year to $32.25 billion. Imports declined for a 7th month in a row by 17% to $52.9 billion, leading to a trade deficit of $20.7 billion.
The exports and imports decline is largely due to the price effect because the prices are lower than last year, but there is also quantum of exports is also slowing down because our export destinations are gradually beginning to slow down.
The major inflation upswing came mere days after the Reserve Bank of India's Monetary Policy Committee, or MPC, decided to keep the repo rate unchanged at 6.5%. RBI Governor Shaktikanta Das said that the MPC decided to keep the policy stance unchanged at withdrawal of accommodation, with the belief that prices are likely to come down soon. However, due to the increasing food prices, the MPC did raise the FY24 inflation projection to 5.4% from 5.1%. Households may be feeling the pinch of higher inflation, but India Inc. is enjoying record high margins and profits. The combined quarterly net profit of listed companies scaled a new high in the April-June 2023 quarter, owing to a sharp rise in operating and net profit. The combined quarterly net profit of 2,937 listed companies in the Business Standard sample reached a record high of 3.36 trillion rupees during Q1 of FY24, up 47.2% from 2.28 trillion rupees a year ago and 3.27 trillion rupees during the last quarter of FY23. The growth was led by the BFSI and auto sectors. So, are we seeing early signs of fresh headwinds for India? How do economists see the situation progressing? And how long might the stress last?
I don't think these are fresh headwinds since quite a few of these trends have been more or less expected. Because, for example, we knew that with the global economic slowdown, exports would also be slowing down. That's exactly what's happened. We have seen that the industrial production numbers have tended to be volatile, and this is not typically the time when we get high growth in industries. The only surprise factor has been inflation coming in at 7.4%. I would tend to think that since the problems are more on the food side rather than on the core side, there is some hope. A, there's going to be a statistical base effect which could bring down this number. And second, in terms of supplies coming in as and when the harvest comes through, there could be some kind of soothing of the inflation numbers. Right now, we've seen the prices coming down in certain markets. One is hoping that this will be more widespread and will bring down the rate, but that could take a month or two.
And what would be the immediate steps that the RBI and the government can take to prevent problems from multiplying?
I would tend to think that the government has done everything that can be done, because we should remember that when there is food inflation, I think food inflation cannot be dodged until the supplies increase. So what the government has done is they've taken several steps. You've tried to stop the export of cereals, that is rice this time, of non-basmati rice. You've tried to augment imports of pulses to make sure supplies are there. You've tried to put controls in terms of the stock limits, which hold for wholesalers as well as retailers. But these are measures which can only work to a certain extent. I think until the final harvest comes out for the next tomato crop or the next onion crop, I think prices will remain elevated.
Central bank is holding on to interest rates at these levels, and I think which is the right thing to do at this juncture. So government has taken a number of steps, I think, from banning of exports to importing more. They've also introduced stocking limits, etc. So I think clearly, unless I think the weather becomes a big problem, you have El Nino impacting the rice crop, and El Nino also impacting crops in other countries from where we import like edible oils, etc. So those are monitorables. We don't know what's going to play out there. But overall, I think the steps taken by the government are broadly in the right direction, and they are focused on reducing food inflation.
Experts believe, therefore, that the current macro trends are not too worrying and have largely kept to expectations. They also stress that both the RBI and the government have taken sufficient measures to curb the outcomes of inflation on other macro markers, and prices may soothe only with the next harvest.
The government, meanwhile, is taking steps to bring down inflation. It is importing tomatoes from Nepal, releasing onions from the buffer stock, and has placed big import orders for tur dal. Apart from taming inflation, the government is also moving fast to ensure electric vehicle adoption. It recently approved rolling out of 10,000 electric buses across 169 cities in India. But is this mega order enough to meet the growing demands of cities? Abhijit Kumar finds out.
The Union Cabinet on August 16th approved the PM E-Bus Sewa scheme that would add 10,000 electric buses to the city bus service across the country. The scheme is estimated to cost 57,613 crore rupees. Out of this, the centre will provide 20,000 crore rupees for a period of 10 years. Union Minister for Information and Broadcasting Anurag Thakur said that the buses will be deployed in 169 cities of the country having a population of 3 lakh and above, as per the 2011 census. The scheme will be deployed in a public-private partnership model. Another 181 cities will be supported for development of e-mobility infrastructure such as charging stations, etc. under the Green Urban Mobility Initiatives. Respective states or cities will be responsible for running the bus services and make payments to the operators. The centre will support these operations by providing subsidies to the extent specified in the proposed scheme. But as India's urban population continues to grow and the demand for public transportation surges, the question remains, will this electric bus order be sufficient to cater to the needs of the selected cities?
We also have to take into account what other initiatives have been taken before. So one is the FAME driven deployment, which is about 7,000 electric buses. Then we have the National Electric Bus Program, under which one tender was floated by CSL. So if we add those numbers along with this 10,000 number, then we kind of land at about 63% electrification of the existing urban bus fleet operated by the authority, 63%, which is not actually a bad number. Now, if I take into account the non-urban fleet, then this number comes down to 9%. If you are considering authority-run urban fleets, I think the percentage electrification is pretty good. But if then you include private segments, if you include the non-urban segments, then the percentage comes down.
Last year, Union Transport Minister Nitin Gadkari had said it's time for India to have a professionally managed public transport system based on electricity. According to a national daily, as of August 2022, 1,950 e-buses were deployed across the country. In June this year, the Delhi government announced that it is set to add nearly 4,000 electric buses in a phased manner to its fleet by 2025. Earlier this year, government-owned Convergence Energy Services Limited selected 6 commercial vehicle manufacturers to supply 6,465 electric buses under the country's first e-bus tender of the National Electric Bus Program, or NEBP. NEBP aims to deploy 50,000 e-buses and strengthen the demand for these vehicles across the country in the next few years. So, how will the new fleet of 10,000 e-buses help India reach its electric mobility goals?
This will ensure that public need is met. We also will meet the need of zero emission at the tailpipe, and also ensure that by having such a large order of 10,000 buses to be deployed over whatever period of time that the government is envisaging, a very important issue will be that there will be a development of industrial capability in India to localize electric vehicle technology.
With the government keeping its share of the subsidy to around 1/3 of the total estimated cost, the move is expected to add financial burden on the selected cities and a few states where PM e-bus Sewa will be deployed. Can this uneven share of budget create a roadblock for the scheme?
Larger issue here is that public transportation has become a central and state government joint initiative. Okay, we have seen it in the metros, in which both the central government and the state government have invested. So this is a proven model which is already existing. Now the proportion of investment can be a financial decision based on thing.
I did not expect that the central government will contribute 100% of the budget, because you need an ally from the states, and if the states doesn't have a stake, then they will not take care of those programs. So it is good to have a stake from the states, but this ratio could be a bit uncomfortable or a daunting task for certain states or for certain cities who do not have the bandwidth or who do not have past experience.
The government's decision to deploy a mega electric bus fleet on Indian roads will be reliant on the scale of deployment and integration with existing transport systems. The selected cities need not just e-buses but also a comprehensive mobility ecosystem. Advisory bodies believe ensuring the success of PM e-bus Sewa will require careful planning, robust execution, and continuous innovation.
India's EV project should hit the fast lane soon. Moving on, fresh uptick in consumer prices and global cues have thrown a spanner in the ongoing rally in equities. So which factors is Dalal Street now eyeing that could move the needle on equities over the next few months? Harshita Singh finds out in our next report.
Inflation in the US seems stickier than expected. Indian inflation also keeps on surprising us. The last month July CPI data came at 7.4% versus an expectation of 6.4. In Wednesday's meeting, the FOMC made it very, very clear that we are going to focus on controlling the inflation, and that pause that you're all looking for is quite some distance away.
Against this backdrop, global inflation and therefore the monetary policy trajectory will be crucial to watch out for, while back home, state assembly elections will be another key trigger that may move the needle on markets in the next few months.
There are state elections scheduled in the state of Madhya Pradesh, Chhattisgarh, Rajasthan, Mizoram and Telangana. So out of these 5 states, BJP is in the government in only one state, which is Madhya Pradesh. So markets would like to see if BJP can make headroom into any of these other 4 states. Apart from this, the markets would also look at the election results as a practice match for the Lok Sabha elections, which are scheduled in later in 2024.
That said, with oil prices at multi-month highs and FII flows seeing some moderation over the last few weeks, the market trajectory is poised to face hiccups.
There can be short-term corrections from their highs. I don't know when they'll come, but there can be 8 to 10% corrections from their recent highs.
Those at Kotak Institutional Equities expect the market to witness a period of consolidation, as rich valuations will cap the upside. Meanwhile, Axis Securities has a December 2023 target of 20,200 on the Nifty, which further reflects expectations of moderate moves. Today, on August 21st, investors will closely track the market listing of Reliance Industries' recently demerged arm, Jio Financial Services.
He's making plans for an early retirement. Business Standard.
Moody's meanwhile affirmed a Baa3 rating on India. It said high GDP growth will contribute to gradually rising income levels and overall economic resilience of the country. But it flagged debt burden and curtailment of political dissent. Speaking of politics, the opposition held a protest in Parliament recently, accusing the government of weaponizing parliamentary privilege. Vasudha Mukherjee tells more about it.
British Bill of Rights, which defines parliamentary privilege of freedom of speech, says that the freedom of speech and debates or proceedings in Parliament ought not to be impeached or questioned in any court or place out of Parliament. Several countries, including Australia and India, have borrowed it from the British Constitution. The Indian Parliament's privileges are contained in Article 79 to Article 122 of its Constitution. The aim is to ensure that legislators perform their duties effectively without fear of repercussions. While there is no exact list of privileges allotted to members of Parliament, it does allow the right to free expression during debates. Parliamentary privileges in India are divided into collective and individual privileges. Collective privileges say that the Indian Parliament can decide if its reports, debates, and proceedings should be published or not. The Parliament has a right to exclude outsiders from its proceedings and even conduct sessions in secret. The Parliament can make rules for regulating its procedures, business conduct, and work adjudication. It can initiate inquiries and call witnesses. The Parliament can reprimand, admonish, suspend, expel, or even imprison individuals who breach privileges. The Parliament is informed about the arrest, detention, conviction, imprisonment, and release of its members. The proceedings of the Parliament and its committees cannot be questioned in court. No arrest or legal process can occur within the House without the presiding officer's permission. Individual privileges, on the other hand, say that Member of Parliament cannot be arrested during sessions nor 40 days before and after sessions. They have freedom of speech in the House and are immune from court proceedings for their speech in Parliament. They are exempt from jury service and can refuse to give evidence or appear as witnesses during sessions. If any member of Parliament feels that the parliamentary privileges have been breached, they can raise a privilege motion with the chairman. To invoke parliamentary privilege, two key conditions must be met. The matter under consideration must pertain to a recent occurrence, and the involvement of the legislative body is necessary. This right is present both in the Rajya Sabha and the Lok Sabha. In the Lok Sabha, the Speaker exercises authority in making decisions on privilege motions, acting as the initial level of scrutiny. The chairman can then refer it to the Privileges Committee. The chairman can also choose to nominate a 10-member committee and appoint a committee chairman. The Privileges Committee's role is to assess such cases and provide appropriate recommendations. After conducting a thorough review, the committee generates a report. If the council has not stipulated a specific time frame, the report must be presented within 1 month of the committee's referral.
By the nation's trusted bank, SBI, the banker to every Indian.
As many as 23 bills were passed during the monsoon session of Parliament, which ended on August 11. Well, that's all for today. For more news, views and analysis, please log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.